Thank you everyone for joining today's webinar where we will be discussing business credit reports. This webinar is being recorded. All attendees will receive a follow-up email with today's recording and presentation deck within a week. All participants have been muted, so please use the Q&A box for any questions and we will answer them at the end. Today, your presenter is Rod Griffin. He is the Senior Director of Consumer Education and Advocacy at Experian. And with that, I'd like to now hand it off to Rod. Welcome, Rod.
Thank you, Lena, and thank you everyone for being here this afternoon. And look forward to sharing information particularly about the relationship between consumer reports, so individual reports, and business credit reports, how they relate, how they don't, and what they are, and why it's so important. Well, as Lena said, if you have questions, please put them in the Q&A box. I'll do my very best to answer. I want to start out with just a kind of a brief discussion of the basics of personal and business credit report. We talk about then the value of having positive personal and business credit histories, why that's important, particularly as a small business owner, and then discuss how your personal credit can affect your ability to get credit for your business, and how your business credit can then affect your ability to qualify for personal credit. And then to conclude with a discussion of how to manage both your personal and business credit to help you succeed both professionally and individually. Fairly straightforward, a lot of ground to cover in 30 or 45 minutes, but I'll do my best. I want to start out with kind of the personal credit report side, because it's important to understand, especially as a small business owner, what we think of as a micro business owner, someone who has, a business of fewer than 5 employees, which is really the predominance of small businesses in our country. What a personal credit report is about, because quite often, in fact, most of the time, when a person is starting a small business, they'll underwrite initially or qualify for credit using their personal credit history to start the business, and then transition to business credit as their business grows. So it's important to understand just some basics about personal credit. And first, what a credit report is, and it's simply a record of your financial accounts and obligations and the identifying information that goes with them. We call it a credit file, a credit report, a credit history. Same thing true for personal and business reports. The credit reporting company, of course, collects that information, stores it in a format that's used by lenders to help them make lending decisions, to determine the potential risk that a person will repay a debt as agreed, and from a business perspective, whether that business will pay its expenses as agreed or its debts. When you look at a personal report, you're going to see your identifying information. So your name, your address, social security number, date of birth, previous addresses, variations in your social security number, your name, your address, and so on. That's critical because in the personal credit reporting world, we have more than 220 million credit reports for individuals. You are not the only one with your name in most cases. There are other Rod Griffins, for example, that are out there. So we use that information to match to the credit information that's associated with that identity. Account information, of course, you'll see really the heart of the credit report, the types of accounts you have as an individual on your personal report. They will include things like revolving accounts, which are credit cards, carry a balance from one month to the next. You'll see installment loans. You might see mortgage loans. You might see auto loans. So any kind of credit agreement that you have would be part of that credit history. It's going to show your principal loan amount. It will show the remaining balance. If it's a credit card, it's going to show your credit limit and your balance on that card. Most importantly, it's going to show whether or not those bills are being paid on time. If you use your personal credit to secure a loan for business purposes, to buy equipment, for example, for your business, but you're using your personal credit, that loan would probably be a personal loan and would show up on your credit report rather than be a business loan because it's not in the business name. And so it could affect your personal credit report initially in your credit scores. So it's important to understand what types of accounts you'll see and what you'll see there. And again, that payment history, because if you're using your personal credit, it's going to affect your personal credit, your ability to qualify for personal loans as well as business loans initially, if that personal report's what you used to qualify for the business purchase. And so it's a personal loan as opposed to a business loan. On your personal report, you might see bankruptcy public records. That's the only public record still in credit reports today. There are no records about things like civil judgments or tax liens, paid or unpaid, parking tickets, library fines. We used to have library fines. We don't have it for about 20 years. So those have gone away. Things like that are not part of a credit report anymore. You would only see your account information and bankruptcy public records. It's debt related. You would also see inquiries on your credit report. An inquiry is simply a record of who's looked at that credit history. On your personal report, there are two types. There are what we call hard inquiries that are the result of your application for credit because it represents a potential new debt that could indicate some risk, but doesn't show yet as an account. They can affect credit scores a little bit. They're the least important factor, but they can have an effect on scores. The other kind of inquiry on your personal report are what we call soft inquiries. Those are inquiries for things like getting your own report for insurance purposes, for employment purposes, for pre-approved offers, reviews by your existing lenders. They're only shown to you on your personal report. No one else sees them. Lenders don't get them. They don't affect credit scores in any way, but we list them so you have a complete record of who's looked at your report. And you would find dispute instructions on your personal credit report. How do you contact Experian if you find something that you believe is inaccurate and have us investigate that and get it updated, corrected, or removed? You will find very similar when we start talking about business reports in detail, very similar information, except that it would be business related. And there are some other kinds of information in a business report, but you'll see similar information there. On your personal report, information remains, everybody's familiar with the 7 years. In most cases, how long does information remain? Everybody will say 7 years. In fact, positive information remains longer. So if you have an open account, it's in good standing, it will remain indefinitely. And if it's a revolving account, for example, and I've seen accounts that have been on reports for 30 years or more. If you close an account, that closed account is going to remain for 10 years from the close date. So we're going to keep that positive information longer than the negative information. If you miss a payment, it remains for 7 years from the date of the missed payment. If you fall behind and never catch up on that account, it's charged off as a loss by the original lender, and then it's sold or transferred to collections. That collection account is going to remain for 7 years from that very first missed payment on the original account, what we call the original delinquency date. So it's deleted 7 years from the original delinquency date of the original account. Hard to say, but the collection account is treated as a continuation of the original debt. That's important to understand. It's one of the things that people often misunderstand. So the original account, because it's charged off, and the collection will be deleted at the same time from your personal report. Chapter 7 bankruptcy remains for 10 years from the filing date. Chapter 13 bankruptcy remains for 7 years from the filing date. The difference is that under Chapter 13 bankruptcy, you repay part of the debt, so it doesn't stay quite as long. Under Chapter 7, you don't repay the debt at all, any of the debt, so it remains a bit longer. Inquiries remain for 2 years from the date of the inquiry. It's important to understand, though, that inquiries, those hard inquiries, only affect credit scores for 2 to 3 months. At that point, there's either a new account, and that becomes the key risk indicator, and any impact on scores begins to decrease right away and significantly, or there is no new account, so that inquiry doesn't represent risk. There's no associated debt, and so it doesn't really affect scores. FICO ignores inquiries that are older than 12 months, even though they're on a credit report for 2 years, and that's just in accordance with the law. So we talk about credit reports and scores on credit reports and personal lending, and most of us hear about credit scores and worry about that number a lot. Probably should worry more about the credit report. Not probably. You should definitely worry about your credit history more than the number. The number represents the information in the credit report. Call it a credit score. There are a number of credit scoring companies out there. Scoring differs in personal credit reporting significantly from business credit reporting. A credit score in personal and business lending is a tool that's used to analyze the information in the report and help predict the risk. In personal credit reporting, there's companies like FICO or Vantage Score, the lenders themselves, who will get your report, or we will apply that score as we route the report to the lender. It's a separate process. The score is not part of your personal credit report. Again, it's a tool that represents potential risk of lending to an individual. So it represents the information in the credit report. We don't know what those algorithms are for personal credit reporting. They belong to FICO. They're called FICO scores because they're FICO's scores. So their algorithms are proprietary to them. Vantage score, same thing true for them, but we can route the report through a number of them. There are hundreds of different credit scores depending on the lender, the type of lending. So if you're buying a car, there will be a different score in personal credit reporting for auto loans as compared to buying a house, which would have a different score for mortgage lending. If you are working with a credit union, they may use different scores than a national bank because their customers are different and the characteristics that indicate risk are a bit different. That's important to understand because when you look at business credit reporting, you'll find that's a very different situation when it comes to credit scores. Although the scores are used for the same thing, they help the lender predict the risk of lending to the individual or the business. When you look at credit scores, I always encourage people to not pay too much attention to the number. The number's nice to know, but it's not the most important thing to know in terms of making it better. A number, knowing it will give you a sense of where you stand in terms of risk on a business report. That business credit score will give you a sense of where your business stands in terms of risk, but you need to know how to make it better. And if all you know is a number, it doesn't tell you what you need to know to make it better. When a credit score is calculated for personal lending purposes, a series of risk factors are generated. They will tell you exactly what you need to look at to make your personal credit score better. The numbers can be very different, and there are different scales in personal credit reporting that can vary widely. There are scores that have scales most commonly from 350 to, or 350 depending, to 850. That's kind of the scale that most people are familiar with, but there are also scores that go higher. For example, a FICO score for auto lending goes to 900. So you could have a score higher than 850. There are other scores that have lower scales. There's a credit union score that goes from from 75 to 108. So kind of like a thermometer, I guess, but the highest score possible is 108. There are other scores that go down. So there was a score at one point that went from 1300 to 0. The lower the score, the better. So it's important to know what scale that number you received comes from and what that number means within that scale. But most importantly, the risk factors that are generated with that score will tell you exactly what you need to work on from your personal credit history to make that score better. Unlike the numbers, the risk factors are very consistent. So if you focus on the risk factors, you can make all of your scores better. You will find something similar when we talk about business credit scores. I won't spend a lot of time here. Vantage score is a competitor to FICO, kind of like saying Chevrolet and Ford. They look at the same information. When you're looking at a credit score for personal lending, the most important factor will always be your payment history. If you have late payments, it's going to hurt your score very rapidly and very significantly. You need to make those payments on time. Utilization on your revolving accounts is the second most important factor. So keeping your balances as low as possible on your credit cards. The lower they are, the better. In the case of Vantage score, they actually break it into two pieces. They have total utilization. So if you have 10 credit cards, you add up all of the balances on those 10 credit cards and all of the credit limits and divide, you get a balance to limit ratio or utilization rate. That's total utilization. That's about 20% of the Vantage score, give or take, depending on the individual. Might be more, might be less, depending on your credit history, but it's going to be somewhere in that range. And then they look at individual accounts. So for each account, if you have high balances on one account, it can hurt your credit scores, even if you have zero balances on the others. So that in total is about 31% of Vantage Score 3.0. You'll see similar numbers for FICO. So if you pay your bills on time, keep your balances low, you're going to have good credit scores. That translates pretty well to business lending as well, which I'll talk about in just a bit. The credit scores will also look at how long you've used credit. So what's your mix? Do you have different types of credit? Have you used credit for a number of years? Is the payment history good over a period of time? They're going to look at what's happened recently. Have you opened new accounts, taken on more debt? Have you paid things off? Have you had late payments recently, or have you caught up on late payments? So that recent credit is going to have about a 5% impact, so fairly small. And it's not just the inquiries, although we often talk about inquiries in terms of recent credit. They're one of the indicators. And then available credit, which is essentially your overall capacity. That's the remainder of that amount. And so that should equal 100%. And you, again, will see very similar pie chart for FICO on personal credit scores. Business credit scores, I'll talk about in just a bit. They look at the same kinds of information, a bit different in terms of what's in a business credit report, but still looking primarily at, are you paying your business debts on time, meeting your obligations on time, and are you not becoming over indebted? So really important issue. And I talk about the personal report first, as I mentioned, because it's usually where business lending begins. When you're opening a new business, you'll often use your personal credit report to secure credit, to buy equipment, get a location initially reserved, potentially renting a location, those sorts of things. As your business grows and develops, you should begin to transition those relationships so that you are no longer personally liable for those debts. It's a crucial component of being successful as a business. You want to make sure that your personal credit is separated from your business credit. So it's important to talk about, and to start with, what exactly is a business credit report? As I said, it's very much like a personal credit report, except that it's specifically for your business lending relationships and your business credit. It will serve as your financial references for your business. That will help potential creditors make decisions about whether or not they want to work with you, whether or not they want to lend with you. It can also be a marketing tool when you use a business credit well, because that business credit report will show that you're reliable in terms of your relationship and in paying the terms that you've agreed to. When you have a business credit report, it will show you all of your financial relationships, including suppliers, wholesalers, manufacturers of your equipment, the banks you do business with, leasing companies you work with, potentially other financial institutions. There are more than 25 million businesses in the US that have established credit relationships. So as a business, not just as an individual. Experian actually specializes in our business credit reporting service, or what we call business information services, in smaller businesses. And so we have the big ones too, but we are a leader in small business credit reporting and helping small businesses demonstrate their reliability as an entity that a lender would want to work with. When you get a business credit report, you'll see similar information that you would see in a personal report, but specific to the business. So you'll see the company's name. You will see a list potentially of the key personnel. So if you're the business owner, you may be listed as the business owner. You may see the officers of a company. So CEO, president, COO, those sorts of relationships. You will see an SIC code to identify the SIC relationship, the business type, whether you're incorporated or an LLC. That's critical. So as a small business owner, the most important step you can take, and one of the first steps you should take, is to register your business officially. In order to have a business credit report, your business must be legally structured. So you will need to be registered as a limited liability corporation, as a corporation, in order to have a business credit report established. So one of the first steps you should take. You'll also see the business address, the date of incorporation, phone number, or more than one potentially. You would see the years in business, which can be very important to a lender. Often a lender would like to see at least 3 years of being open and operational, successful, in order to make a loan. They often have minimums and in terms of when they can begin to make a loan. So 3 years kind of is a number that I often hear from lenders. You would see the number of employees and you would see sales figures. So how much revenue do you generate in a year? All part of that business credit report. In more specifically, in terms of the payment information you would see, businesses have structures, as you likely know, that will specify terms for payment. We don't really have that in a consumer report. It's typically 30 days. You have to pay your bill once a month. In business relationships, it may be 45 days, it may be 60 days. You may have different terms, and your business report's going to show the current days beyond terms. We hope there aren't any days beyond terms. You want to be within that term. You can see a payment trend indicator, which you don't see in a personal report. So a business credit report, if someone's looking at it, would see that there's a trend of on-time payments. Potentially, perhaps there's a trend toward negative payments, or even that there's cyclical payment periods. So that could help them identify a business that may be seasonal, for example. And so would still be a good lending risk, but perhaps would be slow paying in certain times of year. So a payment trend indicator can be very helpful in that regard. You'll see the lowest 6-month balance, the highest 6-month balance on accounts. You'll see the current total account balance for each account. You'll see the highest credit amount extended at the median amount. You'll also see individual account information. So what type of loan, who the lender is, those sorts of things, just as you would on a personal report. Just like a personal report, you will see the inquiries for your business credit report listed. So you can see who's asked for that credit report. And you will see public records, and more than just bankruptcy in a personal report. You could see judgments against a business. There may be other legal filings. Those sorts of things could be part of a business credit report as well. So a bit more information in that regard. I also mentioned that the score is different in business lending than in personal lending. In personal lending, as I said, there are hundreds of different scores. They are determined by the lenders as to which score they use, what the scale is, what scores are acceptable. In your business credit report, that score is part of the report, which is not the case for personal credit reports. So your business credit score will be part of your business credit report. It has a scale of 0 to 100. We call it our business IntelliScore or business IntelliScore Plus now. The higher the score, the better. That score, the higher the score, the lower the risk of lending to you. So you want to have as high a score as possible. We will provide the risk factors that go with that score, just like the consumer score, so that you can see what you need to do as a business to make that score better. Lenders use the score to help them predict risk. Different from consumer reporting, individuals can get your business credit report. So with personal credit reporting, there are very clear restrictions under the law as to who can access your personal credit report and under what circumstances. So not just anyone can get it. With business credit reporting, those limitations do not exist. So anyone can get your business credit report. That actually can work as an advantage to you as a business because you can market that business credit report. You can say, hey, get my report for my business, and it will show that I make my payments on time, I meet my terms, I have no public records that would indicate I'm at higher risk. I have a great business credit score. So you can get that score with your report and use it as a marketing tool potentially. But that business credit score works just like a consumer report. The higher the score, the better for you in terms of risk, and want to be sure that you have as low risk as possible so that you can get the best terms with your business relationships. So where does a business credit report come from? Well, it doesn't just happen. It's very similar to consumer reporting as well. There's very, very close relationships to them. The first step is incorporating your business. Form an LLC in most cases for small businesses. You will then receive an employer identification number. At that point, you may apply for business credit with a lender. That bank, or in this case, a credit union. So Provident Credit Union would say, we would like to make a loan to your business to help you become more established and be more successful. and they would open a business account in the name of the business rather than you as an individual. At that point, you will have that account reported to your business credit report. A business credit report will be established. You should also have a dedicated business telephone number or line, as well as things like email addresses and online contacts, websites, to help demonstrate your business is actually a business and not an individual. And you'll begin to establish relationships with other companies who may report other kinds of trade information and payment information. So there's, payment on terms, wholesalers that you're working with, for example, or suppliers that you're working with for the products that you provide. So really very similar to a personal report. So how do you get that report? Fairly straightforward. With business credit reporting, you can go to smartbusinessreports.com, or you can go to experian.com/business credit report. On that report, once you have it, you will see if you've been declined credit within the last 60 days. And if you can then get a free report from Experian, you should get a notice of declination, and you can call us and get a free free report from Experian Commercial Relations. You can also purchase a scored report. And again, unlike personal consumer reporting, you can get your own report in personal reporting. Just about anyone can get your business credit report and can see how your business is performing. You can also monitor your business credit report similar to the way you monitor a personal report. You want to make sure that the business credit report is accurate, that it's up to date, that it's complete, and we want to help you make sure that that's the case. So getting a report from time to time periodically is very helpful. You can get a one-time report, or you can sign up for what we call Business Credit Advantage. That gives you unlimited access to your business credit report and score. We provide email notification of changes to the credit file that we have in our systems, and we will give you potential early warning. We will give you early warning of potential identity theft. Businesses today, especially small business, are increasingly targets of identity thieves, and they will do things like spoof websites and business information to fool people into sending money to someone that looks like your business, for example. And so we want to make sure that we're alerting you to potential misuse of that business identity and information about your business, so that you can act on it and have it resolved and can stop any kind of activity that would indicate fraud is happening against your business. And this gets to why I wanted to start with the personal report. People often ask, are your business credit report and your personal report linked or merged in any way? And the answer is no, they're not linked together. They're not merged, but they can be related, especially if you're using your personal credit to secure business credit. And that's when things can get to be a little bit blurred. The Fair Credit Reporting Act, which regulates personal credit reporting, will allow lenders to review your business, review your personal report. I'm getting tongue-tied today. If it's being used to secure business credit. So if you're a proprietor of an unincorporated business, sole proprietor, for example, partner in a partnership, or you are personally guaranteeing a business loan, the Fair Credit Reporting Act allows the lender to check your personal credit report as well as any business credit report that's on file. The personal report information, if they do so, must be used only for that business credit transaction. They can't use it to make decisions about other unrelated credit or banking relationships in that moment. So it can only be used for that particular transaction related specifically to the business transaction. If you're securing business debt with personal credit, you become personally responsible. So if the business has issues, it can also negatively impact your personal credit. So your personal finances could be hurt if you have poor business performance. That's the primary reason you should try to separate your business and personal credit report and credit as soon as possible. You don't want to have an instance where if you have personal credit issues, your business is damaged, or if your business struggles, you don't want to have your personal credit damaged. So you want to separate them as soon as you can. Your personal credit report and business report can be scored, as I mentioned, using hundreds of different models. Your business credit report, Experian provides a business credit score, but lenders for personal credit may use scores from third parties, and other sources may use their own scoring systems. So it's important to understand that both play a role. Some kind of important data points about personal credit and business credit and how they can be used together to benefit your business, at least initially. We know that more than 90% of US businesses are small businesses with fewer than 25 employees and less than $20 million in annual revenues. $20 million sounds like a lot to me, but with a small business, that's considered a small business level. Small businesses often have little or no credit history, especially when they're just beginning to grow and are just established. As a result, more than half of business owners use some form of personal credit to finance that business at startup and often further into the business life. And as I mentioned, it could be to purchase equipment, it could be to help make payroll, it could be to secure a lease for the location. So any number of things that you could use personal credit to secure that business debt for. The personal credit history acts as a reference for entrepreneurs, people starting small businesses and micro businesses. Once your business is established, that business credit report can affect a supplier's willingness to extend credit. It can affect loan amounts and payment terms. It can affect your insurance premiums. How much is it going to cost to insure that business? So critical to establish your business credit to give you a financial advantage. If you find something you believe is inaccurate, you should always dispute it. First, to do so, you simply get a copy of your business credit report. Business credit reports, and I need to check the price again, they're around $14 for a business credit report. And again, you can subscribe to a service that gives you unlimited access. If you find incorrect demographic information, you can update it at businesscreditfacts.com. Very straightforward to do. Other disputes should be submitted in writing. You'll find the instructions, address, and instructions to do so on that business credit report. We typically take less than 30 days to complete the dispute process. During that time, we encourage you to monitor that business credit report. And to speak with a representative, you can talk to our help desk at this 800 number, and we'll share the presentation with you. So 800-303-1640. And you can speak to an Experian representative. In terms of how long information remains, it's again similar to a personal credit report. We use industry and government guidelines, as most would, for keeping data on file. The expiration dates ensure that information is current enough to create an accurate picture of financial health, very much like a consumer's credit report. The timeframes are a little different than in a personal report. Trade data or account information remains for 3 years in a business credit report. Bankruptcies, all of them 10 years. Judgments, civil suits, if you're sued as a business and you lose, they remain for 7 years. Tax liens remain for 7 years, paid or unpaid. On your personal credit report, we've removed tax lien information, so they're no longer part of that personal report. UCC filings remain for 5 years. Collections remain for 7 years from the date of the collection, and bank and government leasing remain for 3 years on a report. So that 7-year rule still largely applies, except that in the case of trade data, we actually keep it less time than we would on a personal report. So with that, just to wrap up, like personal credit, you need to grow your business with good credit practices. Fairly common sense, sounds easy, can be a lot harder than it sounds. You need to maintain distinctly separate business credit profile from your personal credit profile or your personal credit report. Doing so will help protect you from any difficulties with one or the other and ensure that your personal finances aren't affected by your business activities, and really crucial to separate the two if you can. It's important to stay current with creditors, personal and business, to ensure your payment history is reported, make sure that your business is registered and that you've taken the steps to establish that report. Be sure to monitor your business credit profile. You want to make sure that you're not being victimized by fraud. And we hear about data breaches, sadly, almost every day. And you want to make sure that you are protected and can recover if your business is victimized, because businesses are victims too. I mean, people often don't think about that. You think about a person being a victim of identity theft, but businesses are victims as well of criminal activity, including identity fraud or other kinds of business fraud, data breaches, those sorts of things. You should use your business credit report to limit your risk of doing business with others, because that's what they're doing with your report. They're trying to limit the risk of doing business with you. Make sure that you know what the business is that you're working with. You can get their report for their business and make sure that your suppliers, for example, are good business risks. So use it just like a lender would when you're doing when your business is contracting with others. A really critical piece of the process. And just a few resources to wrap up. You can find information about Experian business reports at experian.com/business credit report. You can get a free report at annualcreditreport.com, your personal report and not your business report. We just announced as an industry that reports at annualcreditreport.com will be available once a week permanently. So you can get your personal report for free once a week at annualcreditreport.com. You can learn more at experian.com/credit education and as well as at experian.com/consumer education, which I don't have up here. I'm not sure why. And if you go to experian.com, you can find our blogs on both personal and business credit are discussed, and you can search those sites. And if you go to businesscreditfacts.com, you can learn more specifically about your business credit report. And I forget how many bullets I have. And the Experian Business Score Planner, you can learn more at this website, sbcr.experian.com/score planner, all available for you to use and to access. And with that, I will stop talking.